Hello guys, welcome back to this week's McInnes Marketing Minute, back on the rooftop where we belong. Jay, say hello.
Numbers.
We've got the main numbers, that's it. The numbers are in.
What everyone's been waiting for.
Yeah,
Computer.
that's that old age kicking in. So this week I feel like this year has just been mental. Just been up, down with everything that's happening. And so we're actually going to break this market update up into two pieces. So we're going to have the first one, what the numbers are actually saying right now. And then the second part is what the trend is showing behind the scenes. So it's not that we never went through those before, but they used to tell somewhat of a similar story, and they're actually telling different stories right now. So
far above and then right.
Yeah, so if you imagine if you're looking above versus you're on the ground seeing it. So we'll start off with where the market's at. I mean, to start off with some sexy figures, not so sexy. We are down from looking at a year-over-year basis from May 2019 to May 2020. We're down, depending on which statistic you're looking at, anywhere from like 30 to 40%, I believe it is. So the numbers are not sexy. We do go by year on year a lot if you watch our videos. So I'm sure you're used to us saying that statistic. So we stand by it, whether it's the good and the bad. So April was also not a positive month. We were down as well. May, not a positive month. We were down as well.
From the bigger picture.
From the bigger picture, which you would think is going to keep moving us downwards. So I think the larger question at hand is, I don't know if you've got it right there, but the home price index. So this is the benchmark pricing, that is assigned to a property for how much it's going to cost. So there's, of course, one between an attached property, townhouses, detached homes, but there's the combined one. And I believe the combined one is sitting at $1,028,400. And it was pretty much the same last month, right? But we've seen an increase over the past 3 months of 1.3%, 1.4%, I should say. And over year to year, it's an increase of 2.9%. So that number has essentially not come down. And Jay, maybe you can talk a little bit as to why that is, with the numbers looking so low, like we just said, why we're not seeing that come down.
Well, if we look at the averages from the big picture again, we're looking at a lot less transactions taking place. The pricing has been very consistent. So as we go down and break down to the closer numbers, we're going to see in a second, the actual day-to-day of the market, the numbers have picked up very quickly. We're just not seeing the velocity of the numbers that we have seen over that, kind of looking at the 10-year bigger picture. So again, looking at it in two parts today, we felt was very needed, because if you're looking from a bird's eye, if you're looking from those 10-year averages, it's very different than if you're looking at it month over month. And more specifically, what everyone's talking about these days, what we've just been through, or what we're still in the middle of, COVID and all this sort of stuff, the reopening of everything, what the actual month-to-month differences are, because those are big swings.
Yeah, and the thing is, and why, again, to break it down into the 2 points, why it's so important is they can paint very different pictures and very different what a buyer or a seller would feel as security levels. So, for example, March, before all of this happened, before COVID, so pre-COVID, it was crazy busy. If you told somebody that we were 20% below the 10-year average in sales, they would have laughed at you. I mean, the amount of multiple offers that were going on, over ask, places being sold in a week or in a day was just substantial. But we were 19.9% below the 10-year average for sales figures still.
And the interesting part about that, and we've talked about it in comments from a number of people, because a lot of people use those figures as their benchmark and their kind of baseline of their comfort level on the market. Am I going to enter? Am I going to exit? And what does the 10-year look like? Which, as we kind of commented, you can look at that as kind of one of your few specific points to keep in mind. But I really don't think or believe or trust that it paints the right picture day to day if you're actually looking at numbers today and what the climate of the market is today that you're actually entering or exiting.
Yeah. No, I would agree. And it's that sales to active listings ratio that we keep talking about. As of May, we're sitting at 15% for our sales to active listings ratio. As you know, if you previously watched us, that's what determines what type of market we're in, sellers, buyers, or balanced. In order to be in a balanced market, we need to be anywhere between 12 and 20%. We're in 15% right now, so we're right in there. Last month, we were at 11.8%, which was the buyer's market range. But the previous month before that, we were at 26.3% in March, heavy seller's market range.
Just to be clear on that again, 0 to 12 buyer's market, 12 to 20% range, balanced market, 20 and above seller's market, but for
a sustained period of time. So that's it. So in the last 3 months, we've literally gone into all of them. So the key word being is until we're in there for a sustained period of time. So in April, when it dipped down and the numbers came out and it was all looking bad, that's all well and good. But in May, we're now sitting in the balanced market range, 15%. So that's why you're not seeing that downward pressure on prices coming down as of yet, as we haven't been in the range in which we need to be. And we haven't been in that range for a long period of time either.
Yeah, it's been very we'll get into the numbers, but very all over the place.
Yeah.
And we've hit all those levels, which has been interesting. But what we're kind of waiting for, pertaining to last week's video as well, is where are we going to land for the prolonged?
So that's where we are right now. So where we are right now, to summarize, is we haven't seen enough downward activity to put the pressure downwards, like some are saying. Now, the second part of this is what is the trend in the numbers? So, and I think I'll premise this by saying this is the beginning of a trend. We haven't been in the trend long enough yet for these results to be seen and reflected in pricing and things. But what is the beginning of the trend starting to look like? That paints a very different picture, as Jay, you can kind of divulge a little bit when we compare the last 3 months in 2019 versus the last 3 months in 2020.
I'm going to do 19 first, just for some clarity. So listings wise, April 2019, just over 5,700.
Okay.
That was climbing from the month prior. And May 2019, we're just over 5,800. So it was increasing, but in that 5,000 range was consistent at this time 1 year ago. Sales, 2019, April, we were just over 1,800 and just over 2,600 in May 2019. So that was a 44% increase we saw April to May last
2019 in sales.
Was, when things really started to pick up.
Well, May was the high month, because it usually happens, right? As we go into spring, May tends to be the peak, and then we start to dip off around June as well. And then last year happened to rally in July,
and then it continued to March and blah, blah, blah. So again, we've got this year now. So March of this year, listings, 4,400.
Mm-hmm.
So still below quite a bit the year prior, but remember we were coming down, and then after that, we started coming up until we hit that peak in March.
Mm-hmm.
Sales in March, just over 2,500. So that was pretty consistent with May. Now, April, obviously, those are only numbers through roughly halfway through March, when things really started to come in with the pandemic and people started to adjust everything. So April 2020 listings dropped almost in half to 2,300. Sales dropped over 50% to 1,100. And then May, coming out of it now, we've now seen phase 2 on the reopen plan in May. A lot of peace of mind a couple of weeks ago when they started, finally came out with the reopen plan. The second phase. So listings shot up 59% in May from April to 3,600, just over. And then sales, 1,485. So they shot up 33%, April to May this year. So obviously that's very much specifically in the listing side, but 33% from that bottom is, I'd say, to that V recovery we were talking about a couple of weeks ago. That's about as V as you can get so far.
Well, I think especially it's shown even more when you compare the change from March to April 2019. I mean, the listings and sales went up by, I think it was like 2 to 3% in each figures respectively. Whereas this year it dropped like huge amount. It came like that V all the way down. But yet then we started to immediately rally back up into that V shape as well. So even though inventory has climbed substantially since where it was, we're still at significantly lower levels than we were this time last year.
Exactly. And we've had that 33% increase in sales, which is absorbing substantially faster than it was the month prior, of course.
Mm-hmm.
And I think it dates back to the first half of this conversation, the upper level, you can't get the perspective on the actual day-to-day by looking at just where we are on the 10-year. But with that as well, it really paints a picture on, I think, the belief in real estate that's still there. Of course, you have all the naysaying. At the start of this, the market's going to go now. This is the trigger for it to all fall, but it's rebounded back in the sales side. I'm not going to reference the listing side to that, but the belief in the market, absorption up 33%, really shows that there's still a lot of belief in the market, and a lot of people are thinking that we're out of this, we're coming out of this, we're hopeful there won't be a second phase.
Yeah, to see that significant rise in demand is pretty good to see, because I think inventory, again, as we mentioned and touched on last week, I think everybody knew more inventory was going to come to market. It's whether that demand was going to be there to keep up with it. So seeing that big rise in demand is the start, as we said, the start of a really good looking trend. And it will be interesting to see how the summer months play out as the various different phases come back in. I think June 15th is phase 3 in BC that it starts coming back out.
Yeah, so that'll be, again, I think another big tell. Phase 3, you've got hotels opening.
Yeah.
So we'll see how much more so, I think, national travel, not so much international yet.
Mm-hmm.
But as people are kind of bound home here and abroad, I think we're going to have a lot more.
Movie industry, entertainment, various different elements opening up in mid-June as well. Yeah.
Will, I think, allow more flexibility and will reflect on us.
Yeah, absolutely. So that's why we've broken it down into 2 steps, because if you look at the year on year, it doesn't look very good at all. But then when you do break it down into the more ground level, what the start of a trend you're starting to see is, it's actually painting the very opposite picture. So that's why it's important to really note the differences between the two, so that you can make the right decision for you financially. We don't want you to move forward with a false sense of security in whether it's going to be buying or selling what's right for you.
Yeah. And I think that's it. I think as we come up into summer, into the next few weeks, as the third phase reopens, I do believe we're going to see a lot more activity on both sides. I think a lot of people are getting a lot more peace of mind now, especially if people are going out, that they can have people in their homes, they're going to list, and just get out there and get into homes to buying.
Yeah. I think that sums us up for this week. As always, thank you for joining us. We'll be back next week. Next week, we're going to have a bit of a discussion on some of the key mortgage changes that have come into effect, and we'll be bringing a bit of a guest on as well to kind of talk about that from the mortgage side of things. I think that's our first guest. Yeah. We'll see if they like it. But until next week, guys, see you later.